While everyone is watching short-term price moves, a much bigger question is forming. What happens to XRP when institutions finally get the regulatory clarity they've been waiting for? Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. This is where things begin to get interesting. If digital asset clarity continues to move forward, and if it eventually becomes part of formal law with clear guidelines, then assets like XRP could finally receive a level of legal clarity that institutions have been waiting for. If that happens, the conversation around crypto changes completely. It moves away from hype and short-term speculation and becomes more about market structure and capital flows, the kind of environment where large institutions typically operate. Right now, we are at a very important stage. Many digital assets that have been uncertain for years may not remain in that position forever. The focus is slowly shifting toward real-world utility and how blockchain technology can be used in the future financial system. Looking at the current market, a short-term drop of around 3% in XRP does not appear very significant, especially considering broader global uncertainty. Other asset classes have also faced pressure, and overall conditions remain challenging. However, markets move in cycles. Periods of uncertainty are often followed by stabilization, and when that happens, crypto markets may regain momentum. At this stage, it appears to be more about timing rather than direction. Prediction markets are also providing some perspective. For example, there are estimates suggesting roughly a one-third probability that Bitcoin could reach the $100,000 level within the year. While predictions are not guarantees, they reflect sentiment about potential outcomes. Historically, when Bitcoin enters a strong upward phase, altcoins have tended to follow with even higher volatility and participation. There are also discussions suggesting that XRP could reach higher price levels over time if regulatory clarity improves and adoption increases. It's important to treat such projections as speculative scenarios rather than certainties. What's more relevant is the broader shift taking place. Blockchain technology is gradually moving from being an experimental concept to a tool that institutions may consider for real-world applications. If we look back at 2017, that was a period of rapid growth in the crypto market. Many assets exceeded expectations. XRP, for example, saw a significant increase from very low levels to above $3, while Bitcoin and Ethereum also experienced major gains. A large part of that cycle was driven by ICOs. Looking ahead, there are discussions about a possible new phase that could resemble that period in some ways, but with more structure. Instead of unregulated token launches, there could be a shift toward tokenized assets that represent real financial interests, such as revenue sharing or ownership in projects. This concept is still evolving, and its success would depend heavily on regulatory frameworks. For example, if a company builds on a blockchain network and issues a digital asset tied to its business performance, that asset could, in theory, reflect real economic activity. In the past, similar models faced regulatory challenges because they were considered unregistered securities. However, with clearer rules, such structures could potentially exist within legal frameworks. This opens the possibility for new types of digital assets that go beyond traditional cryptocurrencies. Established cryptocurrencies like Bitcoin, XRP, and Ethereum are often discussed as commodities, while future assets built on top of these networks could represent regulated financial instruments. If this area develops further, it could attract more institutional participation because it aligns more closely with traditional financial models. In such an environment, networks that support fast transactions, asset issuance, and scalability may gain attention. XRP Ledger, for instance, is often discussed in terms of its ability to handle tokenization and efficient transfers. If real-world use cases expand, platforms like this could play a role, although outcomes remain uncertain and depend on adoption. Another development to watch is the growth of stablecoins. Many financial institutions are exploring or developing their own digital currencies. Rather than reducing the importance of existing crypto assets, this could increase the need for systems that connect different networks. A bridge asset concept is often discussed in this context, where value can move efficiently between systems. Currently, one limitation in the ecosystem is reliance on exchanges and intermediaries, which can introduce fees and friction. If more activity shifts directly on-chain, efficiency could improve. Stablecoins may contribute to this by increasing overall liquidity within blockchain systems. There is also ongoing discussion about XRP supply. Some analysts suggest that portions of supply could be distributed among institutions or partners over time. Others point out that a significant amount remains in escrow, which controls how much enters circulation. Different interpretations exist, and the long-term impact depends on how distribution evolves. From a broader perspective, macroeconomic and geopolitical factors are also influencing markets. Recent developments have contributed to volatility across different asset classes, including crypto. These situations are complex and difficult to predict, and outcomes can vary depending on how events unfold. If global conditions stabilize over time, markets may recover and create a more supportive environment going into the future. However, if uncertainty continues for an extended period, it could lead to slower growth across markets. These are factors that remain outside the control of individual investors. Monetary policy is another key factor. Earlier expectations suggested that interest rates might decrease more aggressively, but current conditions indicate that rates could remain steady for longer. This can influence liquidity and overall market behavior. So overall, while short-term conditions may feel uncertain and somewhat restrictive, the longer-term developments, especially around regulation and real-world use cases, are what many participants are watching closely. If those pieces continue to fall into place, they could shape the next phase of the crypto market. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.